All right, this is going to be a daily outlook into Monday, June 15th. We'll look at also the range of the monthly profile, the weekly profile, since we are going inside of a new week. We also have a very large gap up here happening. Right, market just opened 2 minutes ago and has gapped higher by a pretty large range of ticks. 2000 tick gap higher, okay? You can see that this is being done through the range of the premium SIBI, and price comes from the respective 50% of the weekly BISI. Okay, price from that level first traded inside, this is the previous week's range here, first trade inside the premium SIBI, then into the discount BISI, and then has expanded. I can see here Thursday being an engulfing bar, coming from a divergence at the weekly low and from 50% of the weekly fair value gap. In fact, the previous week's range was a consolidation Thursday reversal profile. Sorry, right? So a bullish closure here. Okay, so I believe that. I mean, obviously, I don't believe at this point that price should come back to the weekly fair value gap, but nonetheless, still a level that should be marked out, since it's, in my opinion, still a relevant level in terms of the monthly profile, right? If ever this level will get revisited for whatever reason. If not in premium, we're looking at the range of the premium SIBI, right? Price could be already inverting this level at the moment, right? So if you see price coming back inside the range and then the lower time frame starting to create bullish PD rays out of it, that would be a confirmation that that this premium SIBI will be used as an inverse level. Okay, here we can look at the range not only of the previous week but of the 3-week look back. So first of all, let's analyze individually all the profiles inside of this range. So we had the 3-week look back here. Its range was a range to expansion profile, right? So consolidation to expansion. The second week of the 3-week look back, we're looking at the range of a Wednesday reversal, right? Price had expanded at the open, consolidated, trades higher, and then rejects, right? Starts creating bearish order blocks, rejection block at the highs at a key time of week, right? And key profile also for this time of week, as well, it's in the name, right? The Wednesday reversal oftentimes will be represented by a New York reversal daily profile, right? Which was the case at these levels. Okay, so expansion, consolidation, expansion, consolidation, expansion to expansion. Okay, so reversal. And this brings us to the range of the previous weekly range here. Right, so price came from expansion, price ended up retracing, price ended up expanding, price ended up retracing, price ended up expanding, and then from this expansion, price expanded again, right? So expansion to expansion, we're looking at the range of a reversal at these levels. In fact, this happened from levels that we looked at here, levels relevant for the monthly profile, with the divergence, and as we saw, represented by a consolidation Thursday reversal profile, right? In fact, here Thursday being a classic buy day. Okay, so let's look at, right? So we know that we come from a reversal. Okay, we come from a phase of expansion that then consolidated. And now, in fact, the market is already rallying higher from the new week opening gap. I mean, I'm always a bit uncomfortable trading against, right, or at least trading long, say, from premium levels when, you know, there's such a large new week opening gap sitting below it. This is pretty much a magnet for price here. There's never been any orders traded at these levels. Price hasn't been efficiently delivered. But, you know, for all it matters, could keep creating fair value gaps higher, could keep creating bullish order blocks higher. And so for the day of Monday itself, right? Unless price were to soon, right? This would be the ideal scenario for me. Price revisits the NWAG and then keeps trading higher from here. But the more it's gonna keep trading higher, right, from premium levels, the more I'm gonna need to see strong closures above old bearish order blocks and overall the range high, right? Say a fair value gap through the range high, because if price trades at these levels and then fails, very likely we'll want to revisit the range of the NWAG. Okay, so recap, we come from expansion to expansion, right? So we're looking at a drawn liquidity for all-time highs plus more. Now we can put up some key levels, or at least analyze the levels residing inside of this range. You can see that inside of the 3-week look back in discount, you can find a very obvious bullish fair value order block. Sorry, this is the final accumulation before the reversal, right? In fact, there was a divergence at these levels. Since the order block has a large rejection block behind, I think that grading the order block itself should be enough. But if that's even price is going to come back to those levels, right? Because so far we're trading in premium. Okay, so the range of a order block, rejection block here located at 25%. At 50%, there's a range of, you got a couple SIBIs, you got a SIBI here, you got a SIBI here. So, you could highlight, okay, say the fair value gap from the expansion of Tuesday. Overall, I would say I prefer still the open from the 3-week look back, right? So this was a BISI at the moment. Price had found a lot of sensitivity at these levels. You can see the price from those levels, right, once it started inversing it, also created these fair value gaps at 50% of the current, the 4-hour dealing range that we're trading in, right? Trades inside of it here and creates a fair value gap at 50%, trades inside of it, creates a fair value gap at 50%. Right, so you can see that at first this level was used for continuation, eventually as an inversion, but at the moment has been reclaimed. You can see the new week opening gap here, probably 25% or 50% of the new week opening gap comes right from these quadrants. Okay, so any return to these levels, you would want to see a continuation higher. And if not in premium, we're looking at the range of a bearish order block. This is the bearish order block that started the expansion lower. Right, this was a failed bullish New York reversal, if you remember. Right, and from there Friday opened and distributed lower. Okay, so in terms of the upcoming weekly profile, very likely the higher the low of week will have to do around these levels. Okay. So far price at the open gapped up inside the premium order block, so this can already give you some ideas coming inside of New York as to what the daily profile will be based on the delivery around this order block, right? Has price expanded away from this order block? If it did so, how's then the reaction at the highs? Okay, does it expand at the highs and then consolidate? Or does it expand above it, retrace, right? And you come inside New York, the market's already trading in premium. The reason why I'm saying that is if the market fails to have a displacement above the range high, I'd say it starts getting choppy, starts being a consolidation phase around these levels, then I think that it can be likely the market will want to revisit the range of the NWAG. But if the market from premium levels displaces the premium order block, displaces the range high, then I think that the day of Monday here could trade higher for the rest of the day. Okay, but overall for the weekly profile, we're looking at these levels, in my opinion. The order block at 75%, the range of a reclaimed BISI, or you can use an inverse, right, an inversion fair value gap here at 50% of the range, and in discount we're looking at the range of a bullish order block. Here, if we look at the range of a 3-day look back, we can analyze individually the profiles here around this level. The day of Wednesday, which is the 3-week look back, was an expansion day, right, represented by a bearish New York reversal. The day of Thursday, also an expansion day, represented by a classic buy, right? So here, what do we have? We have an expansion profile against an expansion profile, indicating reversal. And the previous day's range was a consolidation. Okay, so expansion to consolidation here. This is a swing to Z profile here, right? Price trades to the highs, trades to the lows, trades to the highs, is always unable to displace the range. So a consolidation that is preceded by a phase of an expansion, we do anticipate a new phase of expansion to happen from these levels, right? And if, say, the market would have gapped lower at these levels, okay, very likely would have reversed pretty quickly. Okay, so yes, this is a large gap up, but nothing to be surprised about, right? Because the market comes from a swing to Z that was preceded by a classic buy. Right, so expansion, consolidation will lead to a new phase of expansion. Now, the market is trading in premium, so unless it will find a reversal at the highs, I think it's just unlikely that we'll revisit the levels inside of the range here. But nonetheless, we should still analyze them just in case. Say in case the profile becomes New York reversal, and you're looking for targets to trade short to, okay, then you want to have these levels on your chart. So we can look at the range of the 3-day look back. You can see that at 25% of the range, we have a bullish order block. We have a bullish fair value gap, right? Those were the same levels that we used to analyze the day of Friday. Overall, since the fair value gap held, I would still use the range of the fair value gap. You can see that at 50%, there's a fair value gap also. There's an order block. There's the 4-hour order block, right? So this range is very, very strong here. In fact, if we probably look at, you can see that's exactly where the most amount of orders I've been trading around this range, representing the accumulation into the distribution here. Okay, so pick your poison. There's a lot of levels that you could grade on the chart. Even if you get the wrong one, I mean, for all that matters, price could keep expanding to the highs from here, and then these levels won't even be revisited. Personally, I would still use the range of the fair value gaps since those have held. In discount, from 75% to 50%, you get overall the range of an order block. So you can view price like this. You get the range of a fair value gap at 25%. You got a fair value gap right at 50%. But you can use the rejection block of the order block. You have the wick, since it was a double purge. You can simply have this level graded. Right, this not only represents 50% of the range, but also discount of the 3-day look back. Now, in this case, I'm not going to analyze the previous day's range, since it was a range day. I mean, it doesn't give me much to analyze, say around 25% or 50% of its range. We got this overall, the range of a bullish order block. But this bullish order block comes from the fair value gap, so I think it would be more relevant to keep these levels on the chart. But if for whatever reason price would come back, say to fill all the way the range of the NWAG plus maybe a bit more, it can be that price will simply revisit the upper half here of the bullish order block. Okay, since this is the PD rate located at 50% of the previous day's range. Okay, so you got 25%, 50% in discount, and now since you had a gap up, very, very important to have the levels of the NWAG. right? Which in this case kind of creates, you know, a new range, basically looking at the range from the accumulation phase in New York of Thursday up to where we are at the moment. Right, and we have premium, we have 50%, and we have discount. Another thing that we can put up actually is maybe some standard deviations. We can maybe do that from the perspective of a weekly chart, since the previous day here was an accumulation phase overall. I would use the standard deviations from the reversal of Thursday, right? That's where you got SMT. That's where price trade inside a weekly discount level. Okay, and you can see overall negative 0.5, which was essentially the day of Friday, revisiting the range of a bullish order block from the inverse fair value gap. And now that price has reclaimed this bullish fair value gap, it has gapped higher inside of the premium order block. Right, so from these levels, the market has expanded. Okay, so you could look for a phase of consolidation to expansion, or a retracement to expansion. This would be high probable scenarios, okay, for say for the New York session, going inside the session of New York for the day of Monday. If you see that the overnight session was able to retrace or has been consolidated, then you would like for New York to have that final shakeout to keep trading higher. But if you come inside New York, okay, and say the market is trading in premium, right, has expanded through the premium order block, has expanded through the range high, well, then it's just going to be it's going to be important to see what the previous sessions left behind. Right, did those sessions leave any fair value gaps behind, or were those sessions choppy as it started trading above the range high? Okay, if it is choppy, right, and the market is unable to displace, okay, and starts trading around these levels, we're looking at the range of around 31,000 to 31,500, give or take. That might be, what I'm saying is, it could lead to a choppy New York, or a New York that will want to retrace the range. We're looking at a large range of ticks here. I mean, I don't know how likely it is, but the market has gapped up 2,000 ticks. The market is very, very volatile lately, and it does tend to create ranges of 4, 5, 6,000 ticks. So, everything's possible, and you got to keep all the scenarios open. But the idea for longs is, if price retraces first, that's a better opportunity. If price will trade higher from these levels without needing to revisit the range of the new week opening gap, then it's just going to be important coming inside of New York to see what the other sessions left behind. Right, if those sessions did not leave clear fair value gaps, right, so represented by an expansion phase, then I would, not that I would be careful, but I would need to double check my New York longs if that's what I would want to trade. Okay, I will need to see some very obvious shakeout at either 9:30 or 10 a.m. because price could get choppy or could reverse/retrace in New York. Okay. Okay, so those are standard deviations for the week. Okay, so let's do a little recap. From the monthly profile perspective, we're likely looking at the range of a classic buy, right? First week expansion, second week expansion, and now the third week has opened and has gapped higher through a premium level. Right, so very likely the market will keep trading higher from here. The market is still very, very bullish from a yearly profile perspective. Right, you can see that looking at a 3-month look back, the market comes from a range to expansion profile, followed by the month of April being a classic buy month. Okay, so expansion to expansion, representing a reversal at these levels. Eventually, the previous month's profile also being a classic buy, so a continuation of the trend. And so far you can see that the month of June has retraced the range and is now expanding higher again. Okay, so if this is going to be a classic buy month, right? So if say this week is able to displace the highs here, very likely even the last week of the month should keep on trading higher. Right, we should be anticipating a monthly closure that will be created at around 10 to 30% of the monthly high. Looking at the range of a weekly profile, okay, so analyzing the 3-week look back, we analyzed the bullish order block located at 25% of the range. We analyzed the range of SIBI or reclaimed BISI located at 50% of the range, and in premium the range of the bearish order block. And you get some standard deviations to align with these levels, and to also give you a potential target as to where the weekly high could form. Okay, you'd want to analyze the daily profiles and how they form around these deviations. And on a 3-day look back, we analyzed the range of a fair value gap located at 25% of the 3-day look back. We analyzed the range of a fair value gap of a bullish order block at 50% and 75% of the range, right? So discount. And here, since we have a special event being a new week opening gap up, right? So a rising window type of event. We want to have also the levels of the new week opening gap here on the chart. Okay, in case price were to revisit these levels, the quadrants should be sensitive and offer trading opportunities. Okay, so I think that this covers it for the monthly profile, the weekly profile, the daily profile. Again, it will be very important coming inside of New York to see where is price trading inside of. If price is trading around the range of the NWOG, in my opinion, you want to favor New York longs out of the new week opening gap, with a drawn liquidity being range high, or the high of the order block here. Say from these levels Asia starts rejecting and leaves a swing high around 50% or 75% of this range, right? Trades back inside the range, and then you see a New York reversal profile. The Asia swing created at these levels could be a good target, right? If not for the order block high itself and range high. If not, if price is really bullish, right, then doesn't need to come back inside of the new week opening gap first before trading higher, then it's going to be very important to see how it trades at range high. Okay, if you come inside New York and the market is just unable to displace the range high, creating some kind of fair value gap through it, or if the previous sessions coming inside of New York haven't created any significant fair value gap, this doesn't mean that the market will reverse, but what it does mean is that be careful for a choppy New York, right? As it could be in a daily profile such as a swing to Z, okay, especially if the expansion overnight will be 2, 3, 4,000 ticks. Obviously could lead to a reversal, but if not, right, if the market is still bullish but the previous sessions are unable to create very obvious order blocks or fair value gaps through the range, you would want New York to do it, right? So the market trading around the highs, and then you would want to see 930 have a very obvious shakeout, right? Then you would want to trade this side of the curve, which would likely happen, in my opinion, around 9:45, 10 a.m., right? Those 15-minute candles, that's where you should anticipate the reversal to happen if you are still biased bullish and price has traded higher without revisiting the new week opening gap. Okay, so I think that this covers it. So let's see what tomorrow and this week gives.